Let's talk about the 4 musts you need to know before starting your real estate journey, because too many people jump in blind and end up paying for it later. Whether you're buying your first property or just thinking about getting into real estate, these 4 things will shape your mindset, protect your money, and set you up to succeed and not just survive. Number 1, you must be okay with risk. Let's get this straight. Real estate is an investment, and all investments come with some level of risk. It's not a matter of if risk shows up, it's a matter of when. Now, that doesn't mean you're throwing darts at a dartboard. Real estate is not gambling, but you are putting your money into an asset that can fluctuate in value, where tenants might not pay, where repairs come up unexpectedly, and where interest rates or market conditions can shift. That's why your mindset matters. If you're someone who panics every time things don't go 100% as planned, you're going to struggle. You need to become someone who stays calm, assesses the situation, and makes decisions with a long-term perspective. The good news, you can mitigate risk. That's what smart investors do. With the right team, good education, and solid due diligence, you can minimize the chances of things going sideways, but you'll never fully eliminate risk. So learning how to navigate it confidently is key. Think of it this way. In real estate, you're a pilot. You can't control the weather, but you can control your training, your route, and how you respond when turbulence hits. Must number 2 is you must take the time to learn. Real estate is not a get-rich-quick scheme. It's more like learning a trade. The more time and reps you put in, the more confident and effective you get. There are so many moving parts to this game. Understanding property types, knowing which locations are appreciating and which are declining, learning how to run numbers, cash flow, ROI, cap rate, etc., finding deals through lead generation and networking, and figuring out how to negotiate, structure contracts, handle tenants, manage maintenance, and even plan your exit strategy. If you skip the learning phase and go straight to buying, you're setting yourself up to overpay, underestimate costs, or get into a deal that you can't handle. So take the time to listen to podcasts, read books, watch videos, go to local meetups, and maybe even find a mentor or coach. You don't need to know everything before you start, but you need to know enough to move smart, not just fast. Number 3, you must analyze every deal like it's a test. You've probably heard the saying, you make your money going into the deal. And that's the most important thing about real estate, because if you buy a property at too high a price with too little income or with hidden costs you didn't catch, there's no magic wand that will fix that. You're stuck with a bad deal, and no amount of market appreciation or hoping for the best will change it. That's why you have to get good at analysis. Don't just look at the rent and think, this seems like a good deal. No, run the full numbers. What's the monthly cash flow after expenses? How much will you need to budget for repairs and capex? What's the property tax rate? Are utilities covered by tenant or the landlord? What's your break-even point if rent goes down or a unit sits vacant? Also, consider the exit strategy. Can you refinance later? Could you sell if needed? What's the demand in that neighborhood? A lot of people buy based on emotion. They like the kitchen or the location feels nice, and they forget that this is a business transaction. Make sure the numbers work before you get emotionally attached. And finally, number 4 is you must treat your business like a business, because it is one. This one is big. A lot of new investors fail because they treat real estate like a side hustle or hobby, when in reality, it's a business with real money on the line. Ask yourself, if you were a CEO of a company worth $500,000 or $1 million, which is exactly what your real estate portfolio could be worth, would you be winging it? No. You'd have systems, you'd be organized, you'd track expenses, you'd hire the right contractors or managers, and you'd make decisions based on data, not feelings. This means keeping clean financial records, separating personal and business finances, developing a tenant screening process, creating repeatable systems for maintenance, leasing, and rent collection, and treating tenant relationships professionally, not like friendships. You're the CEO of your real estate business, whether it's 1 property or 10. And the sooner you operate like it, the sooner your investments will start performing like a real business too. Real estate can be an incredible tool to build wealth, create financial freedom, and leave a legacy, but only if you approach it with the right mindset and preparation. So remember, be okay with risk, take the time to learn, analyze every deal thoroughly, and treat your real estate business like a real business. The people who succeed in this game aren't always the smartest. They're the ones who are disciplined, consistent, and strategic. If this breakdown helped you, subscribe for more content like this, and drop a comment and a like if you've already started your investing journey, or if you're just now getting ready to take your first step.